Hi, I'm Gareth Pronovost, and in this video I'm talking about gross margin, specifically how it pertains to the small business owner and entrepreneur. Now, gross margin is sometimes thought of as a KPI. Other people consider it a financial metric. Personally, I don't care how you categorize it, so long as you're considering it and using it in your business decisions. Gross margins is one of those calculations that, if used correctly, can really help you grow your business more profitably and more quickly. So in this video, I'm going to be talking about a quick definition of gross margin, then I'm going to give my top 3 tips for using gross margin in your business, and then lastly, make sure to stay tuned until the end because I'm going to jump into Excel and show you how to get a visualization of this metric for your business.
Welcome to Entrepreneurship by the Numbers, where we help unlock the potential of your business with data-driven metrics.
Okay, first we have to define gross margin. Gross margin is calculated by your gross profit divided by your revenues in the same period of time. Now, gross profit is the first profitability metric that we look at in finance and accounting, and the only costs that are being subtracted to get to gross profit are those cost of sales or cost of goods sold. And those are the costs that are directly related to producing your product or service. So all of your overhead expenses and your operating expenses, those are going to be subtracted out later. The reason that we look only at those costs of sales or cost of goods sold is because those are the ones that have the biggest impact on your profitability. So looking at gross margin first and foremost tells you how well you're doing and how efficiently you're operating as a company. All right, tip number 1. When using gross margin, always start from a consolidated viewpoint. Most businesses have multiple revenue streams or multiple locations, and things can get a little muddy, but you always want to start looking at your gross margin percent in terms of company-wide. And later we'll drill into the other sections, but your first stop is always looking at it and just saying, how as a whole did we do in this time period? All right, that takes us to tip number 2. Tip number 2 is always look at your gross margin on a drill down after you've reviewed the consolidated. So if you have multiple revenue streams, you want to look and check what the gross margin was for each of those revenue streams, or check what the gross margin is for each of your different stores or locations that you might have. There are a lot of ways that you can increase profitability within your company by doing this. If you see one store that's more profitable than others, you can use some cross-training and start employing tactics that that one store uses in order to help the whole company become more profitable. Similarly, if you have multiple revenue streams and you see that one revenue stream is particularly profitable, you can start to sell more of that revenue stream and it will bring up your overall company average. All right, tip number 3. When we look at gross margin, always look at it over a period of time. Gross margin just by itself, like in a vacuum, doesn't mean a whole lot. It doesn't give us a ton of information. What we really want to do when we're tracking different KPIs, gross margin included, is track it over time to say, are we better this month than last month, or this week than last week? And if so, what did we do? And if not, what did we do? So always track your KPIs over time. That way it gives you some relevance so that you can tell if things are going up or the other way. All right, so quick recap. Start from a consolidated viewpoint, then be able to drill down into your specific divisions or store locations or revenue streams, and then always look at gross margin over time, as with all KPIs. All right, as promised, we have now jumped into Excel, and we are going to throw together a really quick way to visualize your gross margin as you track it over time. Now, for this simple example, I am just looking at month, revenue, and cost of goods sold, and we're going to assume that there's only one product line or stream, revenue stream for this company. So these are the only pieces of data you're going to need in order to track gross margin percent, because gross margin percent, if you remember, is your gross profit divided by your revenue. So to get to gross profit, you just take revenue and you subtract the cost of goods sold. Now that we have gross profit in this part, we're going to divide gross profit by revenue to get our gross margin, and magic happens and we have the entire table already filled out. Now I don't want it in just a decimal. I'm going to swap this over to a percentage. like so. And now that you have the gross margin, just select that entire table and you click Insert, come over here to the line graphs and select the line graph. Now you'll notice that originally it's going to include all of the data streams from this table that we have built. So we don't care for this purpose about revenue and cost of goods sold. So right click on the graph, come down to select data, and we're going to remove the revenue and we're going to remove the cost of goods sold. And now you'll see that this graph is only looking at the gross margin, and it really clearly illustrates exactly what's happening to this gross margin over time. Now the reason that this is so powerful is decisions happened in March that started to cause the gross margin to dip, and we can see that quite clearly. By tracking gross margin on a regular basis, we are able to course correct very quickly and get the company back on track to a growing profitability. And so please, if nothing else is taken from this whole video, please do start using gross margin, at least at a consolidated view, and track it over time so that you can make sure to avoid pitfalls like this as you grow your business. All right, I hope that was helpful. As always, be sure to click subscribe if you enjoy this kind of content and don't want to miss out on future videos. And in the meantime, best of luck as you continue to grow your empire. Thank you.